So when somebody says they need an accountant, often they'll say to me, I need a CPA. And most commonly, they don't need a certified public accountant. But that's a standard that gets attention, or at least it's a title that's worthy of respect. But in the course of probates and trusts, there's different specific needs of accounting, whether you're a certified accountant or not, you may or may not do. And I really was lucky to be introduced by a friend of mine who's a fiduciary to Don Babbitt, who does forensic accounting and the specialized accounting done for trusts and estates. And I have a chance to talk to you today. Don, thanks for joining us.
Well, thank you for having me, Bill. It's a pleasure.
Now, you are a certified public accountant, but the things we're talking about today really don't require a certified public accountant as much as they need an accountant who's experienced and knowledgeable, correct?
Correct, absolutely. I would recommend, it depends. We're talking to a lot of people, probably a wide audience right now, and every county is different. Every state is different. I know that our probate courts here in Harris County and Houston, Texas, really don't want to look at any work done by an accountant unless they have the CPA.
Oh.
Yeah, so they'll run into that here in Houston, but that's not to say that that's the case in every county or every state. So that may be why it's like, I need a CPA, you know?
Well, it does indicate a certain amount of excellence that may or may not be appropriate in the particular genre you're dealing with if you're not doing certified financials. That's interesting. So let's talk about specifically trust accounting. What are the types of unique things that you come across as an accountant when you're dealing with trusts and estates?
Well, so some of the unique characteristics is the Power of Five, and understanding that there is a specific, that's on the formation of the trust, right? So you get 5% of the net asset, right, as being the trustee for 5 years. And you've got to submit documentation. Of course, this is our state laws filter that. It may be different in different states. You get that as payment as being a trustee. And so you want that paid at the end of the year, because obviously the value of those net assets are going to go up and down throughout the year. Right. And so there's that unique point. And then also, when did the transfer of assets take place? Because just because you're a trust and you formed a trust, you've got an EIN, right, with IRS. Well, it doesn't start distributing. It's nothing to account for until the TOAs have gone. And so that is something that, lawyers would say it's a trust as soon as this is signed and filed. Well, that's not wrong. That's absolutely right. That's correct. But it's also, when does it start distributing and when does it actually have assets to value? That those could be two different dates. Sometimes they cross years, and that can get a little bit tricky. So you've got to know about that.
Now, you have some ethical issues with trusts that are unique in that, as a trustee, you might be paid as a percentage of the assets, which means the more the assets, the more you get paid. But there are occasions when you want to value the assets less, particularly when you're valuing them for taxes. How do trustees, balance that fiduciary responsibility to maximize the assets, but at the same time, they want to get paid, and there's a fairness there somewhere?
Absolutely. So I think that's a great question, Bill. And highly technical, because there's so much that you can do. So depending on what the assets are inside the trust, right? Are you dealing with, like, I've got one that has houses and they're paying rental income. Well, there's only so much you can do there, right? But if you're dealing with investment vehicles inside and you've got an asset manager, then they can tax harvest to a certain extent. So you've got some bad stocks or whatever inside that investment. They're going to get rid of those, take a loss. That will definitely help with the tax part, right? But then you also don't want to be a penny wise and a pound short when it comes to planning either. So you want to look at, you want to have a team, is what I feel. And that's why I've always loved advisory services. And so this is where it crosses into, if I'm doing forensic work and it's going to court because a trust is getting sued, I'm doing that independent of my firm. If I'm doing trust accounting, but everything's okay, nobody's gotten sued. We're keeping up with the accounting records like the trust says. And you've asked this question, hey, I'm the trustee. I want to get paid X amount of dollars, but I also don't want to have to get hit with this huge tax burden. Well, that's where having an RIA or a certified financial planner who's looking at the long term and the financial health of the individual is very helpful, because we can somehow come to a middle ground where we're mitigating some tax, but we're also, creating long-term financial health at the same time.
It's funny, the person who introduced us, Kevin Bemmel, shout out, fiduciary in California, introduced us. And I'm on a large estate with him, well, large for us, $40 million assets, where, there's a estate attorney, there's a probate attorney, he's fiduciary, I'm the real estate broker, there's a financial planner, RIA type guy, there's an accountant, but we all kind of know each other or have met each other, I've worked with each other. And so the teamwork has been really solid. It's kind of like, I feel like we've got a couple of meetings where I feel like a football team, we get in the huddle and we kind of call out the facts, and then somebody makes the decision, and then we all kind of know our job and go out and do it. So obviously that speaks to the advantage of working with a team that you've worked with and have a relationship with, as opposed to bringing in and you're the outside party, where it makes it harder to learn style and systems and procedures. So obviously, as you build your practice, you want to be included in more of those repeat relationships with people. How do you build your business where you end up working with people like that and developing not just business, but really developing long-term relationships with people that you trust and enjoy working with and enjoy working with you?
Yeah. So the way that I've been successful at doing that, because that's the meat and potatoes of what I do. I mean, it's not like I'm going to court every week. But what we do is, I say from the very beginning that I'm about long-term relationships, that, I've got to, if I don't have the answer, you're going to trust me as an individual or as a trust or as a business, right? To give you the best professional advice. If I don't have that answer and I feel like that falls in, an attorney that I've worked with, Valleywig, or the RIA or the CFP, when we have an insurance agent that's doing auto property, I'm going to say, let me get with the team. And this is where you allow, and this is where I feel a lot of professionals have this is my client, and they want to protect the client, and they've got this relationship with the client. But from the very beginning, you present the team, right? And they understand. And of course, you have to have the client, they want to work with all the individuals as well. So you've got to have the team around them. You don't have to have a team around them face to face at every meeting, but that's what we do. The very first meeting, everybody's there and we sit around the table and we're all talking in our specific areas of expertise, right? And then we tell them how our process goes. So depending on what their need is, and Brad would affectionately call it triage, so first you come in and you do the triage. So if it's in an assets under management, it would start there and we would hike the ball there. If it's in tax, then we would start over in accounting, and then accounting would get that client straight. And then they would move through each expert and be able to have a chance to build a relationship with each expert, talking about financial planning or talking about assets under management. And then that way we have a CRM that gathers all those notes, so we all know the client before we go. And then we also have a way of keeping up with the client quarterly. We're going to reach out with a phone call or an email, see how everything's going.
That planning is so important. I think that often as a real estate agent, I'll have a customer call me and say, well, my accountant recommended this to lower taxes. And I'm like, well, the best way to lower taxes is make no money, right? Then you'll never pay taxes. My job is to help you maximize your profits after taxes. And so if we make 10 million and you end up paying 5 million taxes, you have 5 million. If you only make 3 million, but it's all tax-free, you only have $3 million. So at the end of the day, it's really requiring people to look through different lenses and work as a team and flesh those things out. And there are times that I don't know the tax implications, or in a recent case, I don't know how much the total assets are valued for tax purposes. And that makes a big decision, because if it's over the state limit, now we're going to pay higher taxes. If it's below the state limit, that's not a consideration. And unless I know that number, I can't give the client, proper advice. And that's where the teamwork, comes into play. So how do you, that's one thing you talked about, how to operate as a team. How do you get yourself into the chair to be on part of the team? Like, what are the things you do for your business development, or is it really more come through your firm, and is Brad kind of the main person bringing that business in?
Right. So I bring in a lot of businesses. Individuals I've seen usually come in around tax time and they need their taxes done. They need their taxes completed. And that one's tricky because sometimes you get the individual who just wants their taxes completed. And that can
And at the
bog you.
last minute, the right before the
Yes.
deadline, and they don't have
And I wanted it
everything,
yesterday,
and
right? Yeah.
you're scrambling just to even get a extension done. Right.
Right.
I understand
Yeah.
that.
And it's like that may not be the client for our firm. And we've realized that. So we all have people that we refer out to where it's like that, you're not it may not be the best fit for us because we do want to get everything done on time and the deadline, but we can't do that walking in April, 10th. Okay. We're going to have to put you on extension because there's other people that have paid for services they've engaged with us. And that's the one way I stay in there is with individuals, businesses, it's easy. I talk with them monthly or quarterly, or they'll call me. So I'm constant with my businesses. A lot of things I do with businesses are we're about to have a roundtable, and I'll bring in someone to talk about building working capital because that's a thing right now. Everybody's wanting these big bank loans. Some people need them, some people really don't. And so I'm going to bring in a guy I know it's been widely successful on building working capital without using loans. And we'll have a luncheon and get everybody together and he'll talk and instead of listening to me drone on and on about statement of cash flows or whatever, right? And even though that's important, I'll give them their highlights, but I think it's important to put them in front of other people, other business owners. That's one way with the businesses. With the individuals, it's the tax planning. Did you sell a house? Did you do this? Or, a lot of people try to tax plan with credits. I'm like, bad idea. Bad idea. It's a bad idea to tax plan around credits because credits can be changed at the whim of the government at any time. And we have no control over that. Let's plan over what we have control over, not over what, and please don't step over $1 to save 30 cents. You lent to that when you were talking. And I always talk with my clients about that. It's about flipping the mindset and it's about being educational without being condescending or derogatory because they've come to me because I'm supposed to know this. I do. I went to school. I took the tests. I'm educated in this. I don't want to make them feel like they should know. They shouldn't. But if you're going to make 70 cents net profit, or if you're going to make 60 cents net profit, then who cares about the 40 cents that goes to the government? You're still up. Now some people will argue with me about that all day long. And I'm like, we can whittle away at this 40 cents and try to get a little more over here on your side. And I've got no problem doing that. That's not what I'm saying. But what I'm saying is don't skip over that $1 just because you may have to pay you're going to have to pay some tax. Okay. But if we tax plan, could be less,
Well, on the flip side, I have people who are so excited because they save money on their taxes. And it's like they put so much energy and time into saving money on their taxes that they're thrilled about the 40 cents they didn't pay and they forget the 60 cents they didn't make.
Right.
I've been in real estate since 1986, 38 years. I have never been, there's never been a time it's been more volatile. Even when 9/11 happened or we went to war, I remember as varied options financially. We're looking at the state limit coming back down dramatically next year, unless it's extended. We had a proposal just last week for unrealized capital gains being taxed, which would, I don't want to get into the politics of this. I don't think anybody takes it seriously, but theoretically would just completely upend every real estate investor, every real estate business ever created. You have these extremes on the table, and yet you and I still have to go out and do our job. And with customers, they're like, I still have to sell the house or the property. What do I do? What do you tell people who call you and see these extreme headlines and are rightfully concerned? You shouldn't ignore them, but I always try to say, play the cards you're dealt. You can't worry about the cards that haven't been dealt yet. But to some degree, is that the right advice? What do you tell your customers?
Yeah. So I do tell them that, and I don't want to get into the politics either, but election years do get wild, right? And we had something similar to kind of pull it off of the politics and go into these laws that can change so quickly as we're filing this year, right? The Corporate Transparency Act is still getting juggled around and changed, and so is the child tax credit. They're saying, and so I'm telling people, guys, we're filing this right now because we're filing on time. And this is the best advantage that I can see for you. So we're going to go ahead and get this tax return in. You could get a letter because they're still deciding on who gets, what are the earned income wages and how are they applicable to the child tax credit right now. They're still deciding on that. I don't want to sit here and wait to file your return and then all of a sudden it would be lower amount, right? That it could be a higher amount that you owe or a lower amount that you owe. If it's changing like that, I'm telling them, just ignore the noise. Try to block out the noise. Let's look at and the noise would be the talking heads and the news headlines. And because a lot of times those news headlines, they don't exactly, it's like translating the Pope, right? They're not, he needs a better translator. Okay. And so they're not translating the IRS code and what they're deciding on exactly right anyways. So ignore the noise and let's stay focused on what is right here in the black and white right now. Let's get this filed. And when that comes down the pipe, so it's very similar to what you're saying. When that comes down the pipe, if it comes down the pipe, then we'll handle it then. You know,
Particularly high income earners, they get so caught up on a $5,000 credit or, you know, a minor, relatively in the scheme of their income, minor issue. And it's like, just focus on what you're doing well here. And, you know, if you double your gross income, it'll all work out. I don't think there's any scenario where that doesn't work out for you. But, and if you're caught up in it, I think it can be very discouraging. And I see people get, you know, I have a podcast on real estate news, how I really feel like all of it is wrong. It's all misleading. None of us worth paying attention to. And then I actually take the actual statistics and I try to analyze them and say, here's where the market really is based on, here's how many houses are for sale. Here's where interest rates are. Here's where the, you know, return on investment numbers are right now. Because the news is just become really a form of entertainment. It's no longer really a public service of news. It's really an alternative form of entertainment that people enjoy watching the drama, pretending as though it's instead of a novel, but they pretend as though it's the real economy, and they can get off track. And as an advisor, it's very easy to get caught up in your customer's drama, and I just do my best to try to stay up front. So I appreciate you saying, I think similar to what I'm saying, which is play the cards you're dealt, not the ones that you're worried about.
Yeah, exactly. Because we don't even know, you know, if those are gonna. I saw that unrealized gains thing, and I thought, it's called unrealized for a reason. It's literally, we're marking to market. So the only real, in an accountant's viewpoint on that, is the only real number was what you paid for it. Because it's unrealized because you haven't sold it. You're still holding it. It's just marking to market that day. So the very next day, January 1st, whatever, it could have plummeted and maybe you had an unrealized loss, you know, but it's unrealized because it's not recognized. I mean, they would have to flip the way that's accounted for. I mean, they would have to change so much, Bill. It's just, you know.
I don't think anybody really believes that's going to happen. But you look, I'm in California. We say that all the time. And then next thing you know, it's a law. So
next thing you know, you're getting taxed for it, right?
we have a city now, San Francisco, that literally is taxing vacant properties. So if you have a property and you decide, well, it's just not worth renting with all the risks of rental and squatters and expenses and such, you know, I'll leave it empty and maybe someday we'll sell it. Now the city of San Francisco charges you a vacant unit tax because too many homeowners were deciding not to rent properties and they weren't getting enough revenue on that. So there's some crazy ideas. I'm in California. That's different nationally. I don't see that changing.
Well, I know Boston has some very strange tax as well. Because I just went and spent about a week in Boston and I was like, wow, they have a lot of tax going on over there too. So I was surprised.
On my podcast, I have a section for which cities are trying to compete with California. And the leader, I think, is Denver, actually. Of all the Boston's been on there a couple of times, Philadelphia, but I think Denver is really trying to supplant California as the innovative force of dramatic changes. I think I'll just leave it at that and not get too political. So that said, you know, you work in this business with other professionals. You have other people who are, I'm sure younger than you, starting out in this field, wanting to get into the position you are. What's the best advice you have for somebody who maybe is an accountant, has some expertise, doesn't yet have the reputation, doesn't yet have the team they're involved with? Where should their career path take them to get them at the table of the team, the kind of teams that you're working with and I'm working with? What would you advise them to do to move themselves in that direction? What kind of education or steps or preparation?
Absolutely. That's a great question. And I'm one person that would love to mentor. I had a great mentor. And he's called the Houston Food CPA, Jeff Garcia. I say his name as many times as I can, because not because he needs me to or wants me to, but because I'm so grateful that I realized that I've had somebody show me how to do accountancy and not just, have a CPA and do bookkeeping work, which could be a whole different podcast. So bottom line is the networks, those are invaluable, your professional networks at first, because you're going to find some people who, like myself now, and like Jeff and like some other people I've ran into here in Houston, you're going to find people like the Texas CPA chapter. They've got a CPA chapter like that in every city almost, or at least every state, right? Get involved with some of them. They don't need new business. They want to teach somebody. They want to grow someone up. And so you'll learn not only from some of the best people, but you'll also get business, and the clients that they give you and refer you are going to be good clients. And I don't mean good like they pay you a lot of money, although we do like the kind that folds. I mean, I'm not going to lie, but I mean, like, they're going to be respectful, decent people. They
Right.
want the services. They want professional services. They're going to respect the advice that's given. They may not take all of it, but they respect it, So the professional networks is definitely the first way to go. That's the step one.
There's something you said about when you meet people in person, they are much more likely to treat you decently than people that don't. Right?
Right.
Because and if they're in a group and they know you're coming back next month or next quarter, my experience is they kind of have to treat you better because they don't want the reputation of being a troublemaker, right? They want to get along with the group. And that's why I think those groups are so good. And the thing I try to tell people is, rather than go to everyone, pick one or two and go deep, volunteer, be of service, get there early, stay late, meet the speaker, meet the leadership, see where you can help, do some of the grunt work, make phone calls, follow up or whatever. Because I think it's not about going to as many groups as you can. It's really finding the one or two that fit your niche and working and finding
And that's
value.
how the forensics grew so much for me, because I didn't get into that till after I was a CPA. So I already knew how to do compilations and monthly financial reports, because that's what I was mentored on. But the forensics just happened upon my lap on a referral. And then I went and I got into a cool cohort. Now I find myself getting invited to a dinner in Dallas. Well, that's a city 4 hours away from me. I'm going to go though. And it's specifically for forensic valuation services. It's a little micro community of the AICPA, people all over, accountants all over the nation that are in forensics for litigation or for businesses. And business valuations, particularly if they're going to sell. And that, and like you said, not 15 or 20, but one, and it's a cohort, and I'm going to devote my time to it, and I'm going to give back, and what they've given me, all their resources, all their experience over the years. So yeah, pick one or two.
Fantastic.
I'm going to go pass out books, I think, to a third grade elementary with the Texas CPA chapter, because I signed up on the education committee. I didn't know.
Fun.
Yeah, right. Yeah. So you do things like that. You absolutely, you do that.
So tell me about your role in terms of business. Do you do business just in Texas? Do you do business nationally? I imagine you have investors that have holdings in various states. How do you handle that?
Right. Yeah. So we do business nationally. With the businesses right now, I work with mainly are here in Houston or in the suburbs. Individuals, I mean, we've got individuals all over. I don't actually. I always stay in the CPA role, so I'm always in that advisor role. The AUM RIA that does the investments under management, he could probably better. I think they have to get a license in that state, so to do that, and they do, and so we do Zoom calls. But if we happen to be on a visit to their city, because this has happened before, we went up to Oklahoma. I was speaking to the Alumni Association. We had 2 clients up in Oklahoma. Well, we went and ate steak dinner. you know?
Well,
And so if you're there and you go sit down with them, face to face.
nice.
Otherwise, you got to get on these virtual things. But I guess that's a beautiful thing that came out of COVID, right? Is we get to meet people all over, and we wouldn't have probably necessarily done that as much before. So
I agree 100%. So someone want to get together with you, Dawn, and talk more about your CPA advisory roles or fiduciary accounting specifically. What's the best way to get in touch with you?
you can go on the website Redfish-cat, and you can submit to Dawn. Yep, Dawn B right there, and you should contact us is up there at the top, and that will get to me because since I am a partner. Yep, you just fill that out right there.
Very nice.
That's our main line, and it comes in. Yep.
In your Cypress, Texas, which is part of the Houston, kind of Houston metro area.
Yes, it is. And a lot of firms have moved out of there because, a lot of the big firms and stuff, they take up all of downtown. So
Very nice.
But they do.
Well, Dawn, thanks so much for your time today. Thank you so much for your thought leadership on forensic accounting and working with some of these larger estates in particular, and look forward to continuing conversation with you later.
All right. Yeah, absolutely, Bill. You have a great day. Thank you.
Thanks.